All right. So MCG did such a great job that they asked us to come back on stage. We have a productive asset talk here, a little bit of a debate like last time, and we're just going to stand too as well. So
You guys just heard from Anna. And Anna, when we were having this conversation, just getting some notes for the show notes, I said, I mentioned yield quite a bit, and you said, well, we're actually a productive asset rather than yield. What's the reason for the differentiation?
Because I think yield can come from different sources, and productive assets mean that when yield, you can come from LP. Productive assets can come from mining, lending to companies because they're buying factories or something. And I kind of view this as different from yield. It's more like a returns, and you're taking risks with it.
Okay, so we'll keep this conversation about productive assets today. Usman, we haven't heard from you yet. We just heard from Anna. Maybe a quick introduction of yourself and Oro, what you guys are doing.
Hi, everyone. Great to be here. So I'm Usman, the founder of Oro. We're basically bringing gold on Solana on-chain. Our thesis is very simple. How do we enable anybody to buy gold on the internet as well as earn on it? And different sources of yield or
you're
returns,
the gold man.
or returns, which is what we want to make this asset do things it just hasn't done before.
Yeah, many of us right now wish we had invested in gold and silver and commodities.
You still can.
Still can.
Usman, do you have gold under your bed or something and buried in your backyard? Where's the gold?
It's all in my wallet, man.
All in your wallet,
All in the
on chain.
wallet.
How does that work? Can you talk to us about how your product works?
So very simple. We issue a token which is fully one-to-one backed by gold that is held by third-party custodians, all regulated. And then once that gold is vaulted, we mint the equivalent one-to-one token on chain. And then anybody can buy that from our primary app or via the secondary liquidity. And we're deployed our pools on Matura as well. So there's a gold pool that can also actually give you a bit of yield. It's a different source of yield, which is super exciting.
And for years, Peter Schiff was dunking on the Bitcoin people, and everyone's like, gold, no one wants that. That's for boomers. You made this bet on gold, and now gold is one of the hottest assets in the world. Has that led to adoption of your product? Like, give us some numbers on how things are going, TVL, that kind of stuff.
So we have around 2 million TVL, but what I think is a better number, I really like the fact that we have around 4,500 users or holders of the token, which is pretty awesome to see. We're able to borrow against that token, generate different sorts of programmatic yield on that token, which is super awesome to see. On our primary app, we have around, I think, 800 people who've staked for yield, which is amazing as well. So it's growing. It's been 2 months, and there's a lot more that's coming out. It's also interesting that you say, when last year I was pitching tokenized gold, everyone was like, oh, whatever, right? And now,
then central banks started bidding, and now you're like, yeah, I got gold.
Exactly. It's different now. I think, moving away from a lot of the controversial, which I think is just more a branding, hype, sort of engagement farming piece. Both Bitcoin and gold are important assets. In fact, I think they're complementary. I don't believe they compete. I also don't hold the thesis that in 10 years' time, everybody's going to leave gold and jump into Bitcoin. I think it's going to be flows from other assets versus just gold. And they both play an interesting role in the world that's about to come.
Yeah, I look at both of your protocols, and you have very good yield. I even saw 15% from you. This is outperforming traditional markets by a lot. Maybe tell us some of the strategies you guys use to achieve this.
This is not outperforming traditional markets. This is only outperforming traditional retail markets. So this is where what I was saying, like traditional super high quality quant funds, and if you're looking at similar strategies or risk profiles, oftentimes are on par. Depending on market conditions, it could be even higher if you're running the strategies yourself. But those are not available to retail because they have minimum multi-million-dollar investments. They only take long-term capital. The way we're able to structure something that otherwise would be very much locked up is to have a liquidity buffer that is inspired by stablecoin issuers, because Tether holds a ton of shit on their balance sheets that are completely illiquid, including gold. And they have just enough size to process up to, let's say, 5 to 10% of their balance sheet redemption because of the people that are coming in and out and in and out, and they created this open-ended fund of sorts for money. And in doing this kind of stablecoin-fying things, we're able to structurally make a better product than using traditional rails.
And you have other products that are using your product. I saw Surfcash, who's doing a raise with Startup Fund. Shout out Adam. Can you just talk how like neobanks like that are using your protocol?
Yeah, sure. So we have an SDK. We'll be open sourcing our repo. And right now, people can build on top of us. They can plug USD Star. They don't even really need to use our SDK. If they want to just have a UI that lets users buy USD Star via soon Jupiter next week, via Jupiter or via us, users can buy it and they can just see USD Star. It's the same as if you have a brokerage account and you wanted to buy a stock and that stock happens to be listed or included on the brokerage. That's how it works, but it's even better because the same neobank can buy USD Star, but they can also buy like Oral's gold. They can buy really anything all in one go thanks to being on chain.
Yeah, let's talk about the user real quick. So a traditional bank now, you deposit funds, you might get a 2% return on that. Maybe they invest in treasuries, high yield savings accounts. In large parts of the world, your currency is probably inflating faster than that return that you're getting. You're at 15%. So from the user perspective, they get a better maybe user experience with a neobank, but they also get higher yield. What does that mean for people in other parts of the world?
Yeah, a lot of our users are from emerging markets or international. We're quite well distributed. I think it's great that they're able to hedge their currency inflation and also get way above market returns. Obviously, it comes with lesser known access. How I like to think about it is majority of the people, say in like Brazil is a pretty big market. The people there might not know how to use Solana. We don't have fiat rails plugged in. You have to go through like a local centralized exchange, get into USDC, get some Sol, come to Solana. So that's something we're working on improving, is onboarding users in a smoother way.
I'll say the same question to Usman. Gold is really big in markets like India and other countries around the world. Have you seen traction in those markets for a product like yours?
Yeah, it's pretty interesting. I see when we're always talking about Oro, I see us building in more the digital gold market rather than tokenized gold market, because frankly, when people want to access gold, either you can access it physically or in digital form, and that's the market we're building in. In these markets, the younger people are really taking on to buying gold in a digital manner, mostly because to now buy a single gram of gold is getting more expensive, but also people want to be able to buy in increments or sell it in increments. We see an insane amount of volume actually through our website and app from Japan.
Okay, so I'm in
apparently.
Japan. I log into the app. I purchase the gold. Where does the gold sit?
So currently the gold sits in a vault in Dubai.
In Dubai.
But we are, as we grow, we'll be plugging into vaults in Hong Kong, Singapore, London, New York. And the reality is the bigger you are as a protocol, the more vaults you want to be in. Currently starting from Dubai, but we'll be plugging that wider.
And you're earning a 3 to 4% yield on
Yeah.
top of this gold you have in your vault, correct?
Exactly.
What does that strategy look like? Is that yield that gold's earning or yield that you're making on top of that asset?
So it's yield that is on top of gold, but it's not, let's say, more. It's productive yield. We lend or lease this gold out to jewelers and refiners via financing houses, and it's a very established market, which is also very excluded in the sense that not many people have access to it. It's a very sort of alternative investments opportunity to be able to, earn yield on your gold. And I think the beauty of internet capital markets and the ICM theme is democratizing these opportunities to different people around the world, right?
You said something really interesting about other parts of the gold value add chain being involved. A lot of that is actually happening in Dubai. Gold is Dubai, is the global hub for people, jewelers, dealers, people buying and selling, putting in vaults. Is that true? Like, why Dubai? Is it because that market is here and not somewhere else?
Well, Dubai is one of the bigger markets, largely because of proximity to location. So a lot of the world's mined gold comes out of Africa. and then it comes to Dubai, and then from Dubai it goes on to other parts of the world. So largely proximity to location makes it a very interesting place to do business, and hence some of the bigger, let's say, retail markets or institutional markets, which are China, India, they do their business out of Dubai for gold. And so locations made it an interesting place. It's been growing for the past 40, 50 years. Initially, it was mostly like a services type where gold would come and be exported out. But what's happened in the past 20 years is that refineries have been set up. So now it's kind of like, actually, why should gold come to Dubai just for the purpose of being refined in Switzerland, right? That just defeats the point, because if the market is anyway in the east, why is it going west and then coming out east, right? And so that's kind of been like, now gold comes to Dubai, it actually gets refined, it gets made into jewelry maybe, and then goes to these different big markets. Dubai on its own is also a big retail market and a big institutional market.
Is this replicatable to other commodities? We see silver just hit all-time highs. I'd love to earn some sort of passive income on that. Is it something you guys are interested in?
There is a silver leasing market actually, because obviously silver is also an asset that is used in machinery, it's used in a bunch of industries. I get asked this question a lot. I've been having conversations with quite a few people at silver. The reality is that the gold industry is $25 trillion, right? It's very easy for us to get distracted amongst other asset classes as well. But we want to focus on gold largely because it's got this timeless value that it's not about, it's like you're interested in silver right now, right? But maybe in 6 months' time you might not be.
De Niro is a huge silver bull. I mean, moon math, Dom, where is silver headed? Not financial advice. But.
Up, okay.
Up.
I just like to, like you said, silver is a practical asset,
Yeah.
right? It's used in your phone, it's used in, all these things, which is why I chose silver actually over gold in that investment. But ironically, it's been a better performer these last couple of years than a lot of crypto.
And silver is a beta player, right? So I think as we see the gold markets evolve over the next couple of years, there's going to be more people going into silver. We might do it. I'm not saying no, but I want to focus on some of the core things that we're pushing out over the next few months before we tokenize silver.
Who are your clients? Who's the main focus here? Is it retail? Is it institutional?
Yeah. So currently, as we were building out our, let's say, foundational infra, their smart contracts, the UI, it was very much a crypto native approach. What we are putting out from next year onwards is how do we enable gold-powered experiences in any fintech neobank? Now, it could be a Surf Cash to all the way to a Web2 equivalent, right? And that's where I see a lot of the users sitting, because the biggest learning, or not the biggest learning, but the main thing is that in most countries, users are not going to download a separate app to buy gold, right? Your gold asset is going to sit within your other investment assets, and for a Web3 user, it could be sitting in a Phantom or Soulflare, or for a Web2 user, it could be in your Revolut, right? And so it's about how do we get to those spaces and how do we enable those different companies to be able to offer gold-powered experiences to the users. That's one key piece of the strategy. The other piece is also there's a huge amount of physical gold that is already vaulted around the world in vaults, verified, and it's how can we unlock a bunch of liquidity for that physical asset. So to me, it's like, if we're successful, we're doing two things. One is we're meeting net new demand for this asset, which just is not being met. And number two is we're creating net new utility and use cases, which cannot just be created in TradFi. And that's the beauty of crypto, right? If we're not doing something new, then why are we even doing it, right? Let's not just tokenize things for the sake of tokenizing.
Anna, you had a really great, deep presentation before this. I don't know if I fully got the answer that I'm looking for around, like, who's the core user? What's the core user experience? So am I putting $100,000 into your stable coin, and is it rebasing, or how do I get that yield back? Is it sent directly into my wallet?
Yeah, we chose a rebasing model and went with only one token because we didn't want to confuse users. So majority of the synthetic dollars nowadays have 3 tokens. Generally, it's 2 to 3 tokens, sometimes 4. It's the base one, which is a dollar peg token that doesn't earn yield. It gives you maybe some points. There's a yield-bearing version that you stake and then you unstake and wait 7 to 14 days. And then there's other versions. When I looked at that, I thought, okay, it's going to be very difficult to onboard my non-crypto friends to it. So we just kept one. You buy into USD Star, and it's currently at 1.08 or something, and you just keep buying at 1.028 or depending on how much it goes, like maybe 5 years from now, it'll be like a couple dollars. So it just goes up in price.
What's the benefit of a rebasing token versus the multi-token model?
It unifies liquidity, it confuses people less. We will probably launch, actually we will have multiple versions of the token, but I wanted the simplest UI UX in the beginning. And if you are like a power user or you're a fund and you're willing to get stuff locked up or you have specific needs, you can go for the alternative tranches. But if you're just a simple user looking for a liquid saving token, then USD Star is the way to go.
And am I just buying it and then it's rebasing, or do I have to stake it?
Nothing. So that's why I only have we only have one token. You buy it on app.perena.org, you put your money in, and that's it. You just hold.
30 million TVL, you want to pay out $500,000 in yield this year, is that correct?
Yeah. We launched around mid-September, so September till December, we are at 480K right now.
Amazing. Do you have a token that represents your protocol?
Not at the moment. It's something I've considered. I don't really
Not
like...
at the moment, folks. Maybe a little alpha there.
I don't really like the current token, all the token framework. I think there's more to be desired. So once I figure that out, yes, we'll have something.
Last question here. Everything you guys said sounds great. The question that comes to my mind is holder protection, right? You know, with physical gold, it can stay in a safety deposit vault. You know, with stable coins, you have a bank account with money that's FDIC insured or whatever it might be. What do the protections look like for holders if I want to go with either of your protocols?
30 seconds each.
Well, FDIC doesn't have enough money to pay y'all, so just saying that. We will have tranching. I looked at all the insurance options. None of them actually work, so tranching it is.
Yeah, I think, you know, all the gold is insured. We have third-party proof of reserves every month. We have a third-party custodian that does it. The yield piece, you know, it's all insured as well. Obviously, you know, there is no such thing as a risk-free yield, and so people should understand that. You know, I think there's a lot of misconception that every yield is free. There's obviously some element of risk you're taking, but the way we've kind of structured it is to minimize that risk and mitigate that risk.
Sweet. As we close this out, maybe a quick little call to action. If people want to do more research, due diligence on what you guys are building, get involved, how can they do that?
www.oro.finance, and we're here, Rochan's here, so if anybody wants to come up, please ask us questions, or telegram us, DM us on Twitter as well.
If you haven't gotten any of our swag yet, go get one, and go to app.perena.org.
Awesome. 2026 is the year of productive assets. Let's go. Let's give it up for our panelists. Thank you, guys.